Well, hey there, everyone, and welcome to today's VIP Trade Room with Roger Scott and Matt Horton. My name is Raleigh White, and I'm coming to you live from Austin, Texas, and I'm going to be your moderator today. Now, for today's session, Roger is traveling. He's on his way with his wife to the West Coast to attend a wedding, but Matt and I are here, and we're going to be talking about a number of important topics with a focus on seasonality. This is one of Matt's specialties. We're going to talk about the top stocks and options that are on our watch list. And we're also going to do a replay of yesterday's trading pit presentation that was just outstanding. And we had a number of requests to go ahead and do that again. And since Roger is out, we do have a replay, and I will be here to host that. Now, if you've got any questions during today's presentation, please type those in the chat window, and we'll address them periodically throughout the session so as not to interfere with our presentation. And folks, remember, we do have the chat open to everyone. So remember that there are a couple of ground rules. Number one, always be kind. Number two, stick to the topic. Number three, no political discussions at all. And number four, remember that we are a 100% supportive trading community, and we're here to help each other to become more confident and consistent in all of our trading activities. Now, we did not have a live pre-market open session this morning as Roger was traveling to the airport. But knowing Roger, he was providing us with regular updates on Telegram, and here is a summary of what he shared with us this morning. Number one, he felt that the momentum was going to be reasonable potentially to the upside, with tech starting to lead sectors once again. Once again, this is pre-market, folks. He also felt that speculative stocks were starting to help give the market a directional bias as more spec sectors were starting to take top position. He also noted that the Bitcoin was starting to show some slight weakness. After yesterday, it looked like it was creeping back up towards the bottom of its range. It's tilted back in the opposite direction. Tesla was holding at the 8-day EMA, and he said, watch it if it breaks below the 200 EMA. And then he also said to keep an eye on the SPY and to watch to make sure that it doesn't break below the 8 EMA, because if it does, there's some clear air down there. Secondly, he said to watch to see how the QQQ moves at the EMA, which is where it is right now, and the 578 resistance level. So that's the range he was looking at. And he also noted that the MAGs had bounced off resistance 3 to 4 times. And if it busted through that resistance level, we could see a slide there. Now, as far as his catalysts for today are concerned, and you know what the catalyst is, right? Roger basically reminds us every day that a catalyst is information that is known and has not yet been priced in the market. So from his perspective, he was going to be keeping an eye on the Fed, in particular the core PCE report, personal income, and revised consumer sentiment. As far as other catalysts are concerned, chips. He said, watch the QQQ and the SMH. Software, watch the QQQ to see how it impacts software. Computer hardware, watch the QQQ. And then consumer discretionary, keep an eye on XLY. So once again, looking at all that, obviously keeping an eye on the QQQ was core to what he was thinking about as we got ready for the market open. Now, Roger also gave us some small caps that are on his watch list. And let me go ahead and put this in here for everybody to see. This is the watch list that he posted for this morning. And you'll note that he was suggesting GMHS above 280, MOVE move below above $1.17, and SSKN above 261. Now, the thing that I like to remind everybody about Roger's small cap watch list is, number one, these selections are based solely on price action and volume. There is no relationship between the performance of small caps and what's going on in the broader market, because frankly, institutions aren't putting money into small caps. It's retail investors like us. And he also reminds us that we should only consider placing small cap trades during the regular market hours and preferably before 2 p.m. because he was asked the question, Roger, how long are these levels good for? And his point is you should see these small caps hit these levels pretty early on after the market opens. But if you're start drifting into 2 p.m. in the afternoon and it still hasn't hit those levels, forget about it. Okay, that's his recommendation. Now, as far as Roger's stock watch list is concerned, let me post that here for you as well, because he's had several shorts and a few longs on that list. And once again, these are things that Roger shared with us on his Telegram channel, so I don't have the benefit of any commentary behind it. But rest assured that he took a look at each one of the shorts and each one of the longs, and he feels that they are reaching the points where there's enough internal and technical support to consider these shorts or these particular longs. And I know that coming up here in the VIP session, we'll be covering that a little bit more with you. So bottom line, guys, Roger is on his way to California for a long holiday weekend. He'll be attending a good friend's wedding, and we hope he has safe travels and a wonderful time this weekend. Matt and I are here with you today to conduct today's VIP session. Matt is going to be front and center. His focus today is going to be on seasonality, which is one of his specialties. We're also going to be talking about top stocks and options that are on our watch list. And then, guys, we're going to conclude with a replay of yesterday's trading pit presentation, which was excellent. Yesterday, Roger talked an awful lot about, why he created the pit and what it means to him, why it's his baby, why he loves it. And then he shared with us the program, and it was very, very well attended. A number of people took advantage of the special offers we have, and several people said they missed the presentation. So we are going to do a replay of it when we're finished today, and I will be here live hosting that event. So with that, folks, I think we're getting ready to get started. And I know Matt's here in the room, and he will be joining us shortly. There's my man, Matt. How are you doing today?
I'm good. How are you?
I'm doing great, buddy. I'm doing great. Normally we're on here with Roger, and he is such a great front man. We're kind of like the rhythm section in the background here. But today, this is our chance to shine, Matt.
That's right.
Anyway, it's great to see you, Matt, as always. And by the way, are you on a scale of 1 to 10 recovering from COVID? Are you like at a 7, at an 8?
I'd say at this point I'm about 90%.
About 90%?
Yeah, I've got a lingering post-nasal drip feeling, but
Okay.
my hearing's come back, headache's gone.
Oh, man. So
That was the weirdest part. I had so much swelling on my ear canal that I starting to lose my hearing on my right side.
Oh my God. Well, anyway, you look terrific, buddy. And once again, we're all ears. And I know that you've chatted with Roger about what we're going to be covering today. And I'm here to assist you any way that I can, my friend.
Awesome. Are we ready to get started?
I think we're ready to get started. It's about 2 minutes after 12. I know the YouTube folks are in there. We've got a bunch of people coming into the room here today. Nice to see anybody. I know Roger likes to welcome everybody in person. And Roger's not here, but let us say collectively, he's saying hi to each and every one of you. But a good group of people here. And let's see, and there are a couple of things I can address fairly quickly. If folks, if any of you have missed, some of the presentations that we've given either in the morning session or in the afternoon session or in the VIP session, I'm going to post this for all of you folks. But everything that we do on YouTube is recorded pretty quickly and available to you. So, for example, some people are saying, hey, I missed the VIP session on spread trading, etc. Well, from that standpoint, you can go ahead and go to the Rogers YouTube channel, and you'll see all the VIP sessions that he's held, all the morning sessions that he has held are available to you there. Now, if you would like to have a presentation, a copy of one of the presentations we made on a particular program, like yesterday we were talking about the trading pit, the day before Kane was talking about his morning payout plan. Those are not on YouTube. Those are recorded in our Zoom room, and we can make those available to you as well. But anyway, we do have a bunch of people here in the room. People are going, come on, Raleigh. Come on, you can do the roll call. Well, I can. I can say hi to Catherine and Shannon and Jill and Ken and Rosalind and Shannon and Robert and Diana and Omar and Becky, on and on and on. This is great. Nice comment here. Who's this from? This is a big comment from David. Once again, David, thank you for those kind remarks. And let's see what else we have. Ed, we have Bob, we have John. Who is some of this is Maria is here. You know what? It looks to me like we got the core group here. That's for sure, Matt. You know, yeah. We know that. And we love you guys. Randy. Oh my gosh. Matt's time to shine. Absolutely. Absolutely. Yeah, exactly. Matt and Roger make a great team. And let's see. Okay, so Matt, whenever you're ready, buddy, we're ready to go.
Let's just kind of take a little bit of a general overview of kind of where we're at today in the market, and then we'll kind of move around from there. Let me see here. Number one, assuming you can see Thinkorswim.
Yep, charts look good.
Awesome. Pretty boring day so far. We're getting a sell-off in the morning. We got a nice sell-off in the morning. Honestly, if you're in the trading zone, you know we haven't been very active today. I really expected the sell-off. I didn't expect it right in the morning. I actually expected it this afternoon, but being at all-time highs for really multiple days. Here's a daily chart of the SPY. I mean, we've just been cruising the last 3 days. We're going into a holiday weekend. That is just prime profit taking and delevering. You got 3 days of basically 3 days of news to come out where you're stuck in a position. So you've got the added day where you can't really do any hedging and you can't exit. So typically people like to secure profits. It's also the end of the month. Everyone likes to get their balance sheets up at the end of the month. So this is no surprise. Volume's also, again, pretty low. We've had low volume most of this week. It's the summer. That part's not surprising. We are holding this is the 8-day EMA. We're holding the 8-day. We're actually right around there right now, and we've kind of just been consolidating there since about 10:15. So, well, really 10 o'clock. Not a lot of surprise here. I don't expect much. You might get some fireworks at the end of the day at 3 o'clock. It's not triple wedging or quad wedging or anything, but it's the end of the month. It's a Friday. You got options expiration going on all over the place. We've had some notable earnings this week. And so I'm not expecting much throughout the day. You can't see this, but I can right here. Here's the internals. They're kind of saying the same picture. Vold is a seesaw. Up, down, up, down, up, down, right around zero. There's just no directional bias. Tick, which is the gas pedal, as Roger refers to it, got up to 588 about 10 minutes ago. I mean, that's better than most of the day, but that's still not impressive at all, right? We need to see 800 to 1,000. We really need to see 1,000 to see any kind of aggressive price action taking place. And then ADD, same thing. We're literally hovering right around zero. We started high, but again, that's not even high. 1,500 is high. 772, that is. That's not great. We came down, but again, we had a sell off. But look where we're at. I mean, we're right back to neutral. So, not expecting a lot to go on today. This is not out of the ordinary. We don't have a lot of volume to support a move. We're right at the, although I will say, don't expect us to go any lower today. We've got good support on the 8. And then also, if we look at the volume profile, one, we're in the value area. We've also got kind of a volume shelf down underneath this. So you will see a lot of institutions defend those areas a lot of times, unless there is a catalyst that is moving us in a different direction. I would not be surprised. This is actually the ES. Let's look at SPY. SPY even tells a similar but same picture. So value area is a little bit higher, but we're right on the POC. So it's the highest volume price in the last 5 days. Price likes volume. Uh, Volume, this is a great adage to kind of add to your toolbook when you're thinking about your positions. When you're in a move, either price volume follows the price, or the price will go back to the volume. So if you've got a sustained move, just sometimes we're just going in one direction for a long time, but the volume's not there, don't expect us to keep going. If we get down to a major point like this, like the POC, we can expect some sideways movement from there. But if not, like say we're breaking out the top side, kind of like we did yesterday, still pretty low volume. What did we do? Immediately came back down. I know we had some reports this morning, but no catalyst, keep moving higher. Friday taking profits. Let's go back to where we're comfortable. And that is not surprising at all.
And that's a new panel that we've added to the market internals, isn't it, Matt? The volume profile.
Um,
Relatively speaking, a couple weeks ago, 2, 3 weeks ago.
Actually, this is there's a couple different versions, but this version has been out since the beginning.
Oh, okay.
This is in the members area. There's also Rogers internals,
Okay.
which is also in the members area. His is a little different. I don't like to have my spine volt comboed. And he has the VIX here. I don't
Okay.
have the VIX on mine because I have the VIX on. This is my home setup, but I have the
Right.
VIX on this screen.
Ah, yes. And guys, you need to be familiar with that because, once again, this is how Matt has set up his screens and his charts. He may use different colors or different approaches or whatnot. Doesn't mean it's different. It's just the way this is how he chooses to look at the markets. Appreciate that, Matt.
Yeah, and I also have 6 screens at work, so I like to spread my stuff out a little bit more. A
Okay.
lot of people don't have 6. I have 3 at home, which is better than one, but um, I'll be adding more soon.
Okay. I think Roger's going to do the same.
Yeah,
He,
it's
he's
one once you go to the bigger you go, you just will never go back down.
yeah, yeah.
The only thing I will say is you will start to, as you add more monitors, you're gonna think bigger monitors sounds like a great idea. You're gonna want to go smaller and smaller. Like I have, I think 32-inch monitors at work. I wish they were smaller because what happens is you got 6 screens and they're 32-inch each. So
Yeah.
instead of just moving my head a little bit, my head's over here, my head's over here. So it's a lot of strain on your neck. Where was I? Look at the internals. Yeah, not a lot going on. Right at this move's interesting, but it's lunch, folks. So from low volume to even lower volume. Let me actually I have a couple stocks to take a look at today,
Great.
and then we'll look at seasonality, and then we'll wrap it up. Let me find them. Here they are. All right. First stock is Google. It's strong. Probably a little too much right now. I don't know that I would buy this right now. It's pretty far from the 8. Had a great day. The market's pretty soft today. And then you just be holding over the weekend into who knows what can happen. I would probably wait for a better value buy because it's not moving today either. So we're just chopping around. Odds are you're really not going to get a lot of upside. You're going to have a lot of downside risk, and you're just going to burn a day's worth. Actually, you're going to burn Friday's worth of theta, Saturday, Sunday, and Monday. So you're going to burn 4 days worth of option theta for just waiting around. But I would keep it on your list. It does look got a very nice trend going. And we are well past earnings, so that's not a problem. Next one is bank stock, JP Morgan. Again, right here, 33% of daily volume. I think we're going to see you're going to hear me say this a lot. It's a great looking stock. I just wouldn't buy it today. It's overextended. The market's pulling back. Now, that does kind of lend itself to relative strength because this one is moving a little bit more than Google. But I don't like buying breakouts, especially when there's no volume. 33% is just not enough to support continued all-time highs. So I would wait for a pullback, but again, looks great. I could have got it today at 300. I would have been a lot more interested, but at almost 303 now, this is a hold for me, or a wait and see. Hey, Ron. All right, CRDO. Not sure why Roger put this on the list because it has earnings in
It's a test.
on Wednesday. So we'll see what happens then, but I wouldn't buy it before then. Western Digital's next. This is a good looking one. We're in the pullback zone. Earnings are behind us. How's the volume? Volume's even lower. Can't expect much. What's the SPY at, just for comparison? SPY's at 48%, so that is pretty low. But it's pulling back, so you're getting a good discount. See how the spreads are. They're not bad. I have gone on here. It looks like they have a split going. Or they had a split. They had a split. So these are adjusted now since then. Actually, that looks like a well, yeah, they're more expensive. So maybe a reverse split. I would probably just take the September 19th. Where's my delta? I take the 81s. You say, well, why not take the 80s? You're getting a little bit more delta for the money with the 81s versus the 80s. And you're straddling at the money with the 8081, so it's not super risky to take it. It's not, it's 35 cents out of the money. And it's in today's range. So I take the 81s. I'd probably go out to September 19th. Cost you $300. All right. Oh, next one we have is CVS. Stock has made a nice comeback. This and Walgreens used to be, I mean, just horrible. Absolutely garbage stock. So they're coming back nicely. I definitely would not buy this today. That is a very nice hammer or inverted hammer candle right now, which is a reversal. Some people call it a pin bar. I would definitely be waiting till we come back to the 8, or at least down a little bit lower. That is a clear short signal to me, but I wouldn't short this relative strength, right? So if it's going from the bottom left to the top right in a nice solid stable trend, I'm never going to short a stock that looks like that, for a swing trade anyway. But I would wait, especially if showing you weakness right now. I'd wait for a pullback on that one. Next one is Flex. I'd have to look at the news. I'd imagine they had a catalyst here. This doesn't look very random. This is pretty strong price action. Again, I'd like it closer to the 8, but this pullback's not bad. Let's see how the options look. Ugh, they're not great. That's a 82 delta is very high. Because it's $3 in the money. This one's not my favorite. Yeah. If you're gonna take it, I'd take the 50, but just I tend to be pretty against lower price stocks because the options are just really hard to manage. Because even if it moves, if you so let me be more specific. I don't like the strike width to price ratio on this. So if you look at these, I don't know why I just pulled over internals. Sorry, folks. Wrong one. I meant to pull over this one. Okay. See, we're at $50, $53 right now. The width of the strikes is $5. So it's 10% is the width of the strike versus the price of the option. Not a big fan of those. If you look like something, I mean, the SPY obviously is super liquid, but let's take a company like GE. These are $2.50 strikes. But this is a $275 stock. So, this is a less than 1% width. So you don't need a lot of movement to get into your strike. Uh, I don't like them, one, because of the movement factor. Two, they tend to be a little more illiquid because not a lot of people are buying those. Yeah, you want the best risk to reward ratio. Rob, I did do WDC, but I'll go back to it real quick. We don't have a ton of stocks. Pullback's okay. I'd like to get a little bit lower, but this is not bad. And I would probably take either one of these, the 80 or the 81. Honestly, I'd take whatever one's tighter. I'd go to September 19th. It's 21 days out. All right. We have next here. What was I on? Was I on Flex?
Mhm.
Yeah, I did this one already. Okay. Next one is Tractor Supply. Actually, I like this stuff. I even like the entry. I'd buy this right now. Great trend. Let's look at the options. See right here. Got a $62 stock, 61.88. And we've got dollar width strikes, so that makes me feel nice, warm, and fuzzy. For this one, I'd go 61. 61, 21 days out, September 19th contract. I'd work the order a little bit. I wouldn't pick 205, but looks pretty good. Do you always like the 50 delta more than the 70 delta of raw? Not always, administrator, but it just depends. It depends on how much I have to pay for the 0.70 delta. That's the biggest thing. Like you'll see this on the SPY a lot. Of course, it's going to be a very weird day, but we've got, okay, the 645 is 78 cents. The 644 is $1.30. So it's about an 80% increase in price. And we're only getting 0.17 delta. So can we delta multiply? That's the biggest question. We go one more strike down. I usually don't go two, but the math is a little easier. If we were to buy one of the 644, we're getting, let's call it 0.6 delta. If we buy two of the 46, we are getting 54 cents of delta. So if we buy three, we're getting even more, getting close to 80. And that is still less than the cost of the 644. So you're controlling more of an asset for less money. The caveat to that is your out of the money strike has to be within reasonable expectation of price movement. So I wouldn't not recommend the strategy if you're trading 0 DTE, but if you're going to trade 1 DTE, it becomes a little more favorable. But out of the money options only have value because people think it's reasonably going to possibly touch that level. Whether it's a speculative trader that's long a single contract, or it's a hedge position where they're trying to protect something. Nobody wants insurance on something that they really don't think is going to happen. And even if they do want it, they're not going to pay very much for it. So as time goes away, especially after lunch, once you hit about 1, 2 o'clock, you'll really start to see these start losing value. So that advantage you got earlier in the day with the delta multiplier, you won't get later in the day. But for swing trades, I'm a fan. Let's go to the next stock. Raytheon, same thing. Decent trend. Earnings are behind us. It's actually close to the 8-day. Volume's low, just like everything else, but that's okay. Mm, based on the range of this one, because this trend is a little more diagonal. So if we don't hold this phantom support of the 8-day, our next horizontal support line is down at 156, and that's really going to crush an out of the money option. So for this one, I'd actually probably go in or at the money. So I would probably take the 157.50 if I were going to trade this, which would cost you $400. And I'd go September 19th. Wouldn't worry about going any longer. All right, next one. Energy company, interesting. Just kidding. It's not. It's not the same thing. That's an ADR. So whatever this company is. Trend looks good. Needs to have more of a pullback before I would buy it. It's getting a little consolidated here. Price action is breaking down at the moment, so not a great time to go long. If you wanted to wait for an option, again, I'm going in the money here, 73. Yeah, 73. That was the last long. Let me go to the shorts. Now this list, I'll show it to you. Or maybe I can't. I can't show it to you because it's on my remote desktop, so I can't move the window. But it's just a list going straight down in Teams. And so I almost just typed in shorts. It's like, yeah, that's a weird ticker. But it means this is where the shorts start. All right. First one is General Mills. A little bit of a bounce back. Again, I'd probably want to take it off the 8. I'd want to make sure this, and not just for the sake of the 8. See, we've been in this consolidation range for a while, right? And we had good support right around this $48 level. And then another round right around $49. I want to make sure that we are accepting a further movement to the downside. So I don't want to short this until I'm pretty confident that we don't want to go back into this range. So this is kind of the flip side. I'm either waiting until I get a really good price all the way up here, or I'm waiting until this thing turns back around and breaks at least the 48.75 area. So I either want a good deal for the risk, or I want confirmation that we're still moving lower. But whenever one of those two things happens, I'm going into money again for this one. I take the 50 strike put expiring September 19th. Bill, I have a really strong computer. Um, so I crank it as high as I can get it. I even overclock the RAM. Someone in here, I don't know if they're in here today, had a very detailed explanation of what the optimal range was. If you send me an email, Bill, I will get the details and yeah, because you got to know what your processor is too. It's not just the RAM, unfortunately. I wish it were that easy. Okay. And your graphics card and this short looks great. We've already got the confirmation. We tried to move higher today, and it's not doing much. I'd set an alert at this low right here, 56.73, before I really jumped into the short. But options wise, we really don't have much of a choice here. It's the 60 strike put on the September 19th. That's true, Adrian. It's very true. Okay. Market access. This is very similar to that other one. We moved out of the range yesterday. Today we're trying to move back in it. So once again, I either want to turn back down with a break below 183. You don't have to wait until all the way down here. But if we break 183 again, I like the entry, or I'm waiting until I get all the way up to the 8. Once again, I want confirmation or discount. And these options aren't awesome. I'd probably try to work the 185s. at least go for the mid or better. But you should be able to work the fill. Okay, our next one is fun. Lots of fun. I hate to keep repeating myself, but it's just really the similar situation. This is a little bit weaker, but we're above the VWAP, so I don't love that as far as the short. I don't I don't think this is coming all the way back up to the 8 day. So soon as we broke back below, excuse me, the VWAP, or really 2265, maybe 2250 if you're really conservative with the position, then I like it. Again, I don't think we're coming all the way up to the 8. If we do come all the way up to the 8, I don't like to short anymore. Or if you want to be riskier, you can just go ahead and jump in. 2250, I still feel like is a little bit of a stretch because this is so cheap. Probably going in the money again at the 25s. Expiring September 19th. The one before that was MKTX, market access. And see, we're starting to get a little bit of a rally on the SPY here. We'll see what happens at VWAP. I have a feeling we're gonna crush through it though. Just a hunch. I do think we're gonna have some problems at 645.75 though. Kind of, you'll see a similar pattern on low volume days. We'll crank VWAP. Everybody will get excited. We'll get back up to this midpoint of the opening range. And we'll stall out and start heading back down. Or we can just go right back down right now, and I can look like an idiot. Whatever. Price action's fun like that. What are you taking now? Nothing right now. Don't usually like buying, especially right before the weekend. Not a big fan of buying. That was the last one that I have on the list. But we might find a few more in seasonality. Well, that's not what I wanted. All right, let me pause this. I'm going to pause my screen share for a second. Oops.
Matt, that was a great rundown, I thought.
Thank you.
Really appreciate the way you look at the markets. And once again, you're just tightly coupled with how Roger looks at the market. So, guys, it's just always great to get another perspective as both these guys, size up the markets and the opportunities.
Back to screen share.
And I think people really appreciated also, Matt, the way you brought up how you look for the option. Because for many people here that are new to trading options, that's a leap that they don't quite understand.
That is the hardest part. Finding a stock and a good trend is not too hard in a good market. Finding the right option is a little different. Even if you get one that works, finding the one that'll maximize your gain the highest percentage of the time
You
is
bet.
really the separator. Unless you've got, $30 million sitting there, then just buy the underlying. Don't even mess with the options. Because, you can be the best trader in the world. I promise you, you're still going to get bitten in the butt every once in a while by an option. All right. Here's seasonality. Wish I had something better to show you. This looks terrible. This is the long side, and for the 11 sectors. Um, I mean, just horrible, to be honest. These biggest thing I'm seeing right here, these profit factors, just not nice at all. The accuracy is low. You're not making any money, with the exception of consumer staples, which on the chart look like garbage themselves. So I wouldn't be running to buy consumer staples just because this spreadsheet says so. Price action will also always be more important. So that's kind of a swing and a miss.
Mm.
Let's check out the short side. Oh, you're not sorted. There you are. Also looks pretty bad. That's pretty surprising, but profit factors are horrible by and large. And even when they're decent, like on consumer discretionary, the very top line accuracy is horrible. But these 58% is not an edge. Not for this anyway.
So, Matt, for people that may not be familiar with what you're looking at here, can you give us an example of what a really great setup might look like? Even if you don't find it there, if you could talk to it. Obviously, profit factor is important. So, you're looking at profit factor and accuracy. Are those the two things?
Yeah, so for seasonality itself, which is a little different than evaluating, um, let's say if I was testing a strategy, let's say like the uh, a 8-15 EMA crossover strategy, and I was running a back test on that.
Okay.
I would evaluate it a little bit differently than I evaluate seasonality because I'm just looking for patterns here. I'm
Right.
not looking for a system that can populate an edge as it occurs over time, just looking for trends. So I'm really strict on the accuracy. If we don't have accuracy, you don't have seasonality. So the rest of it's just randomness. So this, again, 70% is a minimum. I'm really looking for 80 to 90s.
Okay.
And then the profit factor in the trades are if the accuracy is good. This is just like a secondary check. Well, okay, it's happening a lot, but am I making any money in the long term?
Okay.
So is it just catching
Makes sense.
little tiny moves and then every once in a while we're getting blown up? Or let's say the losers are 3 times as big as the winners. I don't want to take that because more than likely I'm going to hit the big loser
Hmm.
before I hit 5 tiny winners,
Hmm.
which is why the profit factor is low. So
All right.
that's what I'm looking for.
And this what we're looking at is a custom spreadsheet that you built for yourself. Is that correct, Matt?
Yes, we run the scan every day in AMI Broker, and then after that, it gets put into this nice, lovely spreadsheet, which is a
Yeah.
little bit easier to digest.
Yep.
This is a little more detailed. The more user-friendly version, which is not as in depth, is the data miner software. That's just graphical.
Okay.
But you're really only getting this column. You're not getting this column.
Hmm.
Um, which is okay because this is most important, but this is a little bit better. But we do give you, if you have data miner, there's this sheet, there's a Google Doc in the members area that gives you access to all these, so you can use them in conjunction if you want to.
Okay, great.
So you like something in data miner graphically, you just come here, just look it up by the ticker and say, oh, give it a quick check. It's profit factor good. All right. And now this first two were the long and the short side. So we're buying the stock at the close of the day we're testing, and then we're getting out on the long side when the close takes out the previous day's high, or when the low takes out the previous day's low on the short side. So that's why we're a lot more strict on the accuracy because it has the advantage of getting out on a good day, right? For 10-day hold, this is just a 2-week return, right? So it'll buy today and it's going to sell 2 weeks later. So even if it was up 7 days into it, if you were up 5% and then sold off for another 5 days and then we got out, typically you wouldn't trade it that way. Um, but this is how it works. So, and this is how it's tested. So we're a little more forgiving on the metrics. But if it could do good on the 10-day hold, um, then it's pretty good data. If you've ever seen the movie Dodgeball,
If you can
and the
dodge a
scene
wrench.
where the trainer says, if you can dodge cars, you can dodge balls, and if you can dodge wrenches, you can dodge balls. This is what this test is, right? This is much harder to look good here than here. So if it looks good here, we know we usually we got a winner here. So for example, XLU has a 73.68% win rate and a 1.5 profit factor. Those are decent numbers. They're not hit him out of the park numbers, but in this scenario, those are very, very good, especially for an index. That's a pretty strong one right there. If we look in the chart, it's not great. I'd be interested maybe in buying it off the 50 period. But again, not today. But that's a maybe. The rest of these, not a lot to love here.
And it's interesting. Roger spent a lot of time last week talking about, things that we have to get under control, including emotions. And when days are like this, and let's assume everybody in this room is locked and loaded and ready to go, we're just champing at the bit. When there's not much to be offered up, this is when we start rationalizing and seeing things that aren't real.
It's the easiest time to lose money is when there's
Yeah,
nothing going on.
because we want to go, we want to
Get
pull the
bored,
trigger.
yeah.
And
Yep.
I was talking a little bit yesterday about, for me personally, I have a pretty good definition as to what an A plus trade is. And if it doesn't meet those criteria, I just look away. You just have to look away. And it's tough because once again, we're ready to go. We want to do something. And so, like I said, when you look at this and you go, yeah, that's pretty good. That's yeah, that could work in today's condition. Maybe, maybe not. There's nothing that's selling me on
Yeah.
that.
That trap is especially more dangerous if you're an index trader or a futures trader because you've got a few products you can trade. A lot of people trade one, right? You might trade the ES
Hmm.
or you trade the NQ with the NASDAQ. Um, but typically, if the SPY or the S&P 500 trading range is garbage that day, even if you go to the NASDAQ or the Dow or the Russell, it's going to be the same. They're all super correlated. So it's really hard to sit on your hands because there's not a lot to pivot to. If you're a stock trader, you got a little more options because usually something's moving,
Yep.
especially if you're a day trader. Like I'd imagine there's probably some small caps moving today.
Hmm. Yeah, and that's interesting, as Roger points out when he gives the small cap list that you have to remember it's basically his selections are based by, price and volume, price movement and volume, and nothing to do with what the broader market's doing. It's totally disconnected. And as he says, the reason why is that institutions aren't putting money in there. It's, smaller retail traders. And he expects, there to be that opening pop. And I always thought that was great advice because it can be a quality trade. It's a small cap, can be a quality trade under the right conditions.
Yeah, they're in their own ecosystem, which is nice because you have something to do. Unlike today, where we have nothing to do but watch. Where can you find the chart in Data Miner? Can you please talk about A plus trades for the benefit of everyone? Sure. A plus trades can look John, let me ask you this. Do you mean on seasonality or on the chart? Just in general, like on the chart? Sure. Let me finish seasonality real quick and then I will cover that at the end. Uh, when we did seasonality a lot, one of the things I used to do was give you a count of how many of these are above 70%. And we're on the long side now. Typically, we get 200, 250. On great days, it would be like 380, 400.
Wow.
Today it's
Less than
seven,
10? Oh my God.
seven.
Yes,
Yeah.
7.
So not awesome. Probably one of the worst I've ever seen. The short side is never as big because, the market goes up over time. But this is still 41. That's pretty weak. Pretty low.
Matt, can I generalize that this is not surprising since it's August?
Yeah, that would be a correct generalization.
Okay.
If we go to the 10-day hold, typically I'll let this go down to 60 because you don't have the advantage of that exit if the profit factor is good. You get a little 169, that's still horrible. Not great at all. Um, if I flip it and go to 40, which would be just, 60% accuracy on the short side, we're still at 62, which is showing me that we're not long and we're not short. We're really just floating around. Live consolidation. Very typical for low volume periods, which is
Mhm.
usually what summer is.
And Matt, I know that a lot of this data or all of this data is backward looking. How far back are you going?
Let's see here. I can go back all the way to 1990
Oh, good Lord.
if the
So
stock allows it.
if you okay, so you're going back 30 years or since it was IPO'd, something like
30,
that.
35.
35. Wow.
Yeah. But yeah, some of these, you know,
That's
Equinox.
incredible. So the statistical basis on this is phenomenal,
It's
folks. And
pretty
when you,
large. Yeah. It's
yeah,
just, I don't, I'm not sure I'd want to even go much further back.
when you think about what's happened over the past 35 years, because, some people wonder about, does it withstand the ravages of time? The answer is yes.
Yeah. Mm, excuse me. All right. I mean, seasonalities is a pretty big dud today, folks. Sorry to, sorry to be the bearer of bad news, but this is a desolate wasteland of
Hmm.
non-opportunities. Sure, Wild Ranger. I gotta go back to uh Shannon send me an email and I'll send you a link to it. Someone asked me a question earlier. I can't remember. They asked me what an ideal setup looked like.
Yeah, I think the question was this. I brought up the point about understanding and knowing what an A plus setup is. And once you know what that is, you have to have the discipline to make sure that you see an A plus setup before pulling the trigger, and how difficult that can be in slow moving days when your eyes start playing tricks on you. You start rationalizing positions and they become more of a gamble than a precise decision to enter based on the criteria for what an A plus trade is.
Okay. Yes. On a swing trade, it is for me anyway. It's a good trend with upper momentum that's not moving too quickly. So you want the tortoise, not the hare here. You don't want something that is screaming to the upside, especially if it's making new highs. Um, and that's great money until it isn't, and it will totally crush you. Whenever the pullback comes, even this day, this is a great stock, but like this, any swing position you bought here, any time this week, is probably still out of the money. This is another example right here. This one's not terrible, but like here, this looks awesome. And this is a good example. This is an ideal looking stock. It's not too fast. But when you get this move, which is amplified on stocks that are just making, island highs, right? Just gap up, gap up, gap up, gap up. Whenever the chickens come to roost, uh, even here, any swing position that you bought in this range, if you didn't take profit on, is probably not coming back because by the time you get all the way down here and all the way back up, you've burned so much theta. The best you're going to do is like a 30-40% loser,
Mhm.
typically. And unless you get back really into the money, which does happen. Just happen for some of our swing positions sometimes.
So in looking at this chart, for example, that you're just showing, guys, when it comes to being able to document something like this, and I don't want to put words in Matt's mouth, but you could see here clearly, must be above the American flag, must be above the 8-day moving average, must see continuing bars moving up at a 45-degree. These are things that when you look at this picture, you should be able to physically write those down and just say, this is my flight checklist. I don't take off until I have this checklist. And if the stock doesn't present that with you, you don't take off. You're in a
Yeah.
plane. And once again, Matt, I don't know that I tend to look at things that black and white, because I'm getting ready to take off and I've got a checklist. And that checklist is built on performance over time. So it's reinforced in my track record. And I know you, and I know Roger does the same thing. And these things are, committed to memory. You know it with all the chart time that we spend. You know it when you see it. This is an A+ setup, and your expectation should be that it's going to be a winner. And they're not always that way. But if you go back and look at every trade you take, folks, you should be able to grade it. How many of them are A+? The more that are A+, the better your consistency and results are going to be.
Yeah. So something like this, I totally stay away from. Range bound, choppy, not trending, large candles, not my cup of tea. Not ideal for me. Steam mobile look. Again, it doesn't have to trend well for a year, but I need at least 3 months or so of a
Mm-hmm.
decent trend. Somebody says, why not buy options and sell in the money? Buy the stock, sell in the money. Calls against it. Actually, it's host panel, so I'll read it. Just an idea on these A. This is the question. Just an idea on these A+ setups for swing trades. Maybe instead of buy options, why not buy the stock and sell in the money calls against it? You cap your upside, but it'll protect your downside as well. Just an idea. Curious on your thoughts. So, Mike, that is a good idea, right? It's a great strategy. It's a lot safer. Um, the biggest thing is it's very expensive.
Mm-hmm.
So either you have a well, there's two caveats to this. One, it's very expensive, so your money is not you're losing opportunity cost, or you have opportunity cost because you are using a very conservative strategy that is safer, but it does not yield anywhere close to the best results in terms of net return over time. However, um, a lot of people are in a growth phase of their account. which is why you would use single leg options. You're looking for speculative trades, higher return. You want to manage your risk, but you have to take some to get those gains. If you already have a large account, let's say this is your retirement savings and you're in retirement, you're just looking to kind of subsidize it, make a little money. Maybe Christmas is better this year for the grandkids, but this is your livelihood. We can't take huge swings and huge risks, and we have a lot of capital. This is a great idea. Uh,
Good point.
I bet says, "What's the baby blue line?" Ah, you noticed. So I assume you're talking about this baby blue line on the left side. It's a secret. It's not out yet.
This is in development.
Yep, it is. So, it's a secret. I'm not 100% confident in its abilities yet. Yeah, if it tests out well, yeah, it'll probably get bumped into the Alpha Zone Pro. But until then, it's just being carefully observed.
At which point, and where I say, what baby blue line?
That's right. There's also extra arrows on here. If
Yeah,
you
that
have a
was
really
brought up
keen
as
eye,
well. People
you'll
have been like,
notice that.
yeah, what are
And
those?
also, this is a combo of Perpetrator Dashboard and the Alpha Zone Pro. So this is it. This I know this says Perpetrator Dashboard up here, but it's not. It's a combo. It's got a lot of extra things, and it's a little more sleek. I usually don't even have these on here.
Okay. Look at Matt. Never rest, guys. Always looking for an edge, always looking for a way to interpret data and then have the statistical basis to prove that, it has every reason to give us a good expectation. I love it, Matt, that you do that.
Dave says I have AZP, so no American flag. No, the American flag is for the daily chart, and we don't. It doesn't matter when you're scalping. AZP is the way to do it, Mike. Don't bet the farm because it's got more volatility in it. Yeah, Shannon, mine has all kinds of Easter eggs on it. There's arrows from all kinds of indicators. There's Perpetrator Dashboard, there's Alpha Zone Pro, there's experimental stuff. These aren't even the right moving averages that are on the Perpetrator Dashboard. So I'll tell you what they are though. This is the 15 EMA. This is the 50 EMA on the 5-minute chart. That's VWAP. These are two standard deviations. It's the opening range. And you all know what that is. Dave, there is, but it's just the 50, 100, and 200 period moving average on the daily chart. So
Yeah, it's not mysterious.
and I need a lot more time than what we have left, but my AZP process. Yeah, that also need a lot more time for that. But maybe in the future we'll do a math class.
I think a
That'll
Matt
not.
class would be great. What we need to do here, folks, is please go ahead and send either Matt or Roger, send them an email on things that you'd like to see us address down the road. Because once again, we've always been big on education, but here recently we're getting a lot of positive response on providing the kind of insights that you're getting from Roger and Matt on how they trade the markets. And it's always good to get your feedback as to what you would like to see. So if you would like to have a quote unquote Matt session, let us know the kind of things that you would like to have Matt address, and then we can go ahead and plan and schedule that. So the best thing to do then is just to go Roger@rogerscott.com. Matt, are you Matt at rogerscott.com?
I am.
Okay.
Sure am. MATT. I'll type it in the chat.
I think you should go with 3 T's, with the third T being something that's experimental.
That's funny. I have to talk to my mom about that one.
Okay.
Well, actually don't, because I'm Matthew at home. I'm
There
Matt
you
everywhere
go.
else. Although, feel free to call me either one.
Okay. We'll put a Sir on the front, Sir Matthew.
Yeah, funny. You want to know a funny story, Raleigh?
Please.
When I graduated college, actually, I think I have it right here.
All right. I love it. Props. We have props coming.
Baby. Well, this is my associate's degree, not my bachelor's. But if you look on here, is it not going to focus? Come on. Nope, no dice. Well, if you could see this, because I got that filter thing on, it says Matthew T. Horton the first. And when I filled out the paperwork to get my degree, I didn't pay attention because I was dumb and in college and ticked the first. Like I had a junior. I have no junior, but on all of my degrees from UNF, I am Matt T. Horton the first. So
I love it. You're the first in a long line of Matt
the
Hortons.
first and only.
That's fantastic.
Shannon, I thought about it, but we got a girl, so
All right.
maybe on the next one.
Matt, I think this has been a great session, buddy. Thank you so much for stepping in as the host. I think everybody really got a kick out of the way that you look at the markets and the careful way that you went through each one of the stocks and shared what you were seeing and giving some recommendations and also some options. Look at that. Oh my gosh. What a sweetheart. What's her name?
Madeline.
Madeline. Oh my gosh, Maddie, hi.
Gonna be the next mastermind around here.
There you go.
Oh,
Oh,
She
look
doesn't
at
love
her.
that.
she loves the keyboard.
She does love the keyboard.
She does love the keyboard. And she's sitting there going, Daddy, what's an EMA? All right. So, gang, for those of you that are on YouTube, we're going to be shifting over here in just a moment or two to a replay presentation of the trading pit. So, I recommend that you come over into the Zoom room. Matt, I don't have that link. Is that something you can post for them in YouTube?
Sure. Maybe.
Anyway, for those in YouTube, we are going to be closing things here and moving to, once again, a replay of a presentation of the trading pit that was given yesterday. And I will be here to host that for you in the background. What I mean by that, I'll be answering your questions live, and I'll do a recap at the end of that. But once again, I'd just like to thank Matt so much for his time today. And obviously, you can understand and appreciate his role working with Roger, as both of these guys are sharing with us edges that they've originally created for themselves and how they like to trade the markets And now they're making all that available to us as well. And so we certainly appreciate that because that's what we're here for. Anytime that we can leverage the experience and the background and the results that key people like Matt and Roger have in the market and they can share it with us, I think it's about the only shortcut that I know of you can take in this business, because outside of listening to people that have been there and done that and help us avoid mistakes that could be very costly to us, there is no other shortcut that I'm aware of. So once again, from that standpoint, we certainly do appreciate it. Number of people asking questions about my background. Yeah, this is actually a picture off of my deck here in Austin overlooking the Pennybacker Bridge, which is a bridge on 360, which goes across the Colorado River. And it's a beautiful setting, and it's one of my favorites. And, you know, so a lot of people were asking, where's that picture coming from? But anyway, Matt, I'm going to go ahead and grab the screen here. And let's see, let me grab this. And then share. And so, folks, once again, in this next section here, this is going to be a replay of yesterday's presentation on the trading pit. Man, we knocked it out of the park with this yesterday. So many people interested in this program for a number of reasons. And we decided, since Roger was flying to the West Coast, and he loves to be here live. He hates replays, but he thought it would be important today that for those of you that would like to stay, to go ahead and get the benefit of this presentation. And I will be with you live here in the background, answering your questions as they come up. And once again, with that, I'd like to thank Matt once again for his time today. And Matt, I wish you and Maddie and your wife and your family a wonderful weekend. And I look forward to seeing you in the VIP room on Tuesday, buddy. So once again, thank you so much, my friend.
Have a great weekend, everyone. Send me an email, Manny. I didn't see it. Bye, everyone.
Okay. Bye-bye, Matt. Take care, buddy. All right, folks. And right now, I'm going to get started with this presentation. Once again, this is a replay of yesterday's presentation on the trading pit. And as you have questions during this presentation, type them in the chat, and I'll either address them right away or at the end of the presentation. It's about an hour long. Take care, folks. And I'm here in the background.
So, folks, I've talked to you about the pit. Now I'm going to give you a more formal view. Now, I'm going to tell you right now, there is nothing in this world like the pit. Unless you have me sitting in your room trading full time, you're not going to find anything like the pit, unless you can replicate me or Clyde. Clyde, he's a little better than me sometimes. So, again, let's put it this way. I was good enough to do this. I was good enough to trade this way for the 10th wealthiest family on this planet. Okay? I figure like this: if I was good enough to trade this way for them, I'm probably good enough to trade this way for you. They can probably hire anybody they want. I mean, they owned Universal Studios, Time Warner, Seagram's. They can buy whoever they want, but they chose me. My point here is, if I was good enough for them, I'm probably good enough for you. And if me saying that's not good enough, then how about my track record? Okay, how about my win rate? I think that speaks for itself. Clyde is better. You're right, Cyrus. All right, folks, let's get into this, and let's celebrate. We started the day after my birthday. This is when we officially launched it. Before this time, we were doing it for the whole summer, starting in June or July. We were doing it in the VIP room, and then they finally launched it October 30th, the day after my birthday, and up to yesterday. These are all issue trades. These are all actual trades that we've taken. Okay. Some of you, Wesley, some of you. We've had 94-point plus win rate on over 389 trades. The average return is 11.3%, including winners and losers included. And the average hold time is less than 24 hours. Okay? So let's talk about it. You will have losers. They're unavoidable. We've had 22 losers in the last 2 years, I think, 23 losers, something like that in the pit. They happen. I mean, they will happen. They will happen all the time. And if you think they're not going to happen, they're going to happen even more often. Okay. Now, my name is Roger Scott. Last week, we got that kind of headline that turns. I'm also going to give you my top stocks, by the way, before we're done here. My top stocks for this year and my prognosis of where we stand. So this is going to be pretty important. I mean, this is going to be a big class. You don't want to miss this. So last week we got a news headline that Wall Street really turns heads. Jerome Powell announced that the Fed is considering a September rate cut. How could it be? I can't imagine that. And now the market is pricing it in with 88% probability. But there's one major problem. There's always a problem. Rate cuts are not as bullish as you might think. Historically, when the Fed cuts rates, it often signals the start of a significant market downturn. Remember dot-com crisis when we had the credit crunch? Remember 2008 financial crisis when we had the credit crunch? Do you remember 2020 COVID flash crash where we had God only knows what? And if history repeats itself, we could be looking at another serious downturn in the near future. Now, I'm not showing you this chart to scare you. In fact, quite the opposite. I want you to be aware of the current market risks so you can be prepared accordingly. Because if there's one thing I know for certain, it's the news like this that will cause increased volatility in the coming weeks. And that's why I want to show you a unique strategy that's designed to bust this nut wide open. So today, not only am I going to give you the strongest and the weakest stocks for 2025 at no charge, I just updated them this morning, plus my year-end forecasts on tariffs, volatility, interest rates, oil, gold, crypto, S&P, all the good stuff. But I'm also, actually, I already might have given you my 367 trade, but we'll see if we could find some others. And folks, if you're currently in the pit, and I know that a lot of you are, just let others know. I mean, people are sitting here going, come on, we don't believe he's saying the truth. Nah, he's bluffing. Tell them the way it really is. You're here. The chat is open. Knock yourself out. Oh, that's good, Jay Singer. Let me explain. I've spent the past 2 years navigating the markets with what might be the most advanced trading tool that exists. It's a revolutionary software. It's called the Pro Trader Dashboard, and it tracks the moves of institutions in real time. It helps me compare what the SPY is doing to the stocks, comparing what the SPY is doing to the stocks, and obviously the option, which means you can now pile into the exact same stocks institutions are buying as it is happening. Like right here. When new institutions were likely loading up on cybersecurity company Okta, which I often confuse with Octo, often confuse it with the other name, within an hour of the market opening. Sure enough, 45% in 1 hour. Watch it happen again 2 days later. Most traders had no clue that telehealth company HIMSS was being heavily accumulated just 1 hour into the trading session. But thanks to our brand new trading tool, we knew that it was a surefire bet to surge higher for the rest of the day. And as expected, that's exactly what happened. 52% in 1 hour. And again, Palantir, 73% in 3 hours. And hey, how about today with Google and VST? VSAT, not VST, VSAT. They misspelled it, VSAT. They missed it. Okay. In fact, we've taken the markets to the cleaners the last several months. First week of February, profit, and more profits. Profit for second week of February. Took a loss from January on Home Depot, one of the few trades we lost money on this year. Right there. And made money on everything else. Made money on Apple, made money on Palantir, made money on Apple again, made money on Tesla, made money on Starbucks. March, made money again on Dell, Chipotle, Starbucks. Harry helped, my doggy helped me a little bit. T-Mobile, we all made money. And Johnson Johnson, Lamb Weston, Etsy, Zim. Look at that, we made money there too. Third week of March. Made money, and made money. How about fourth week of March? Thanks, guys. And Raleigh, if they're posting to host and panelists, would you know?
I will. I'm taking
thank you,
care
sir.
of it. Yep.
Last week was a tough one. Tough one, I tell you. Matt was having a baby. Look at that. Verizon, Las Vegas Sands, McDonald's, ARM, Marvell again. Do you see? Are you guys seeing a pattern here? How about April? Woo, Ooh, April, we had 13 out of 14. Look at this SBLK in April. First loss since January. Look at that, Matt. In April, first loss. So this is when we took our first loss since January in April 24. That's crazy. May we didn't take any losers. Win 17 out of 17. June we took a loss. We took 2 losers in June. Look at that, 2 losers in June. And July we didn't have any losers. 24 out of 24. And August we had 14 out of 15. And then I went to Germany, and then we had 46 wins out of 47, including bonus trades. So this is going back all the way. That's how I trade. If you guys want to see how I trade, it's right here in front of you, time stamped, with every price fill. So once you discovered how to ride the coattails of institutional investors, the past 2 years has been a game changer, opening up all kinds of opportunities for people like you, right? Very important, very important. And because the software gets us in and out of the most trades within just a few hours, we've been able to profit in any market conditions. I really couldn't care less of what the market's doing, as long as it's doing something. Now, don't take my word for it. What do 1,628 people have in common? Well, they are crushing it in a program called The Pit. Now, what do they have to say for themselves? Chris, my account's up 182% since I joined. Carlos, 91% success rate. Not even my 401k does that. Brett, I can now trade full-time for a living. Shelton, from 2,000 to 17,000. Randy, 90% win rate. DJ Dave, $6,800 in July. Richard, this is back in the day when Richard was just developing. He's now a lot better than 50,000 so far. Kirk, $58,000 and 12,000. It's mind blowing. This is Omar when he was making 358,000. He's now at 700. I will soon reach my goal, 2,000 a day. HG. This is all Pit, folks, guys. This is all Pit. Gregory pulled 27,000 on just one day, putting him right on track towards 300,000 milestone. I've had over 100 successful trading experiences from your alerts, and people are asking if it's real. It is. Now, as great as those stories are, there's other things to discuss here. Since the end of 2023, we've changed the game. People didn't even think that was possible. 366 winning trade alerts with a staggering 94.1% win rate on real trades, not back tests, not could have, should have, would have, all that crap. None of that stuff. None of that stuff. None of it. Matt, are you still in that trade? Oh my, short, right? Oh boy. What was your entry? Oh, 48.70? Right here, you mean? Okay, well there you go. Now a handful of those top alerts after my team applied options during the internal audit. 40% on Roku, 44% on an hour in NVIDIA, 82% in an hour on AbbVie, 116% overnight on Meta. Now, there were smaller winners and a few that did not work out too. Okay? I mean, folks, things will happen. I mean, I'm not a magician, although I got to say, a lot of folks.
You're pretty damn close.
It's pretty close. If you would have put $2,000 into those trades, you would have walked away with $7,640 in cash, and your money would have been tied up for less than 4 hours. Now, advanced trading tool this powerful. Do you see why I'm not worried where the market might end up this year? Now, I could go on and on and on showing you all the winning trades we've hit so far this year, but here's the point. 94.1 win rate on 366 winning trades. This year is turning into a really good year because it's not just the win rate that gets me this excited, okay? It's the fact that the internal audit showed anybody who took these trades with the selected options could have started with $5,000 and turned it into 40,000, 80,000, 100,000. It gets even better. So if you want my year-end forecast and see how I plan to leverage the most advanced system that you guys have ever seen, one second, I just got to pull up a stock here, then I suggest, plus my top stock picks completely free. Post yes in the chat. Post yes in the chat. Don't overstay your welcome, Matt. Let's do this. Now, let me introduce myself and let me tell you why you should be paying attention to me. There's a really good reason why you should be paying attention to me. First of all, I've been doing this for 31 years plus, 31 and a half years. Number two, I've managed 3 multi-million-dollar hedge funds. Who did I work with? I worked with Kevin Hassett. Kevin Hassett is the senior financial economist of President Trump's administration. He's right now in line to take over Powell's job, which means we may have to change this soon to say partnered with the head of the Fed. Hey, that's what the betting sites say. Don't come to me. I've been saying this for 8 years now. I've also worked with Charles Calomiris, who is the Ivy League professor of economics in Columbia University. All right. And I've traded privately for the Bronfman family, which was the 10th wealthiest family in the world and the wealthiest family in Canada at the time. And I've shared my work with over 500,000 people, and I've also worked with Tony Saliba here at the pub and Curtis Faith. And Tony Saliba is a bona fide market wizard from the Market Wizards book. Now, before I give you a chance to join me for the 367th winning trade, Karen, Raleigh will give you a link, okay? You need to know there's no magic pill in trading that wins 100% of the time. And for folks here right now, I'm sure you already know that. Every good trader has their fair share of winners and losers along the way. After 31 years of professional trading and having shared my work with over 500,000 people worldwide, I'm going to make an admission. Most people think it's laughable to be a full-time active trader because 90% of the traders don't even beat the S&P 500. Now, most traders find it hard to stay consistent in the stock market because of one major problem. They lack a system to detect how institutional orders actually work. An institutional order flow moves the markets. I'm talking about smart money, money managers who collect billions in fees, 401ks, high net worth individuals, hedge funds, corporations, people that can actually move the market. Those are entities that can buy millions of shares in a single day. Citadel, Bridgewater, Mann, all those companies, huge orders that literally move the share price 1, 2, even 5% in the process. They're the heartbeat of the market. But the problem is, and this is a big problem, the majority of retail traders don't have access to trading software that can track their orders in real time. I already did that, Peter. Patel, I already did that. Unless you have $25,000 per year for a Bloomberg terminal, and even that's not going to help you with that. But today that all changes. When you have a way to detect which stocks institutional traders are likely buying and selling in real time, all you've got to do is ride their coattails of their massive buy orders. Like on November 2nd, I knew as it was happening that institutional traders were likely buying up million of shares of Roku 1 hour after the market opened. I sent out an alert. I did it what any good citizen would do. And sure enough, Roku searched higher all day long. Vivek, Michael, Brett, and over 1,000 others cleaned up. My system showed a few days later that DDOG was under strong institutional accumulation. This is the Pro Trader dashboard. This is the tool that I use to find stocks for the pit. As expected, DDOG ripped higher all day long. Doug, Adam, Michael, they made out like bandits. And the same thing happened with CrowdStrike just a couple of hours later. Oh, 1 second, let me check it. Sorry about that. BB, Brian, Robinson, John, they all made money. Very, very important. Institutional traders don't buy stocks like you or I do. When we buy stocks, all right, our orders fill in one shot without moving the share price. But let's say you're smart money and you want to buy 5 million shares of Uber. The problem is you can't buy all those shares at the same time because the average daily volume is only 20 million shares. A 5 million order would instantaneously send the share price skyrocketing. That's not good. We don't want that. So what do? Well, we separate the orders into parent-child orders, okay, and program them to hit the bid, okay, anytime the VWAP hits it. Huge orders and small lots. This is what institutions have been doing for decades. This creates a methodical grind up in the share price, kind of like what you were seeing. In Newmont Mining earlier today, as I showed you earlier. Any dips are immediately bought up, and it creates this steady flow. Okay. When a stock is under heavy algo buying pressure, it has strong intraday relative strength, like what you're seeing right there. The key is finding which stocks have the strongest intraday relative strength within the first hour of the day. That way you can ride the algo buying spree all day long. So what do you do? Well, let me give you an example. Take a look at SPY, right? That's SPY on November 20th. It was up 1% on the day. Verizon, on the other hand, was one of the strongest stocks in the S&P, and it was up nearly 3.5% on the day, okay? That means intraday relative strength was really strong for Verizon. The smart money likely had their trading algos programmed to accumulate Verizon shares all day long. If you would have known that within the first hour of the day, like we did, you would have gone and rode the buying spree for the rest of the day. Doug, JC, Kathy, they made out like bandits. Watch it happen again with Seagate on December 8th. 1 hour into the session, we knew STX had strong intraday relative strength compared to the SPY. That means that institutional algos were likely gearing up to accumulate STX stocks all day long, okay? All you would have had to do was buy STX knowing it was likely going to grind higher throughout the day. And sure enough, STX, just like it's going right now, or was going earlier today, boom. Bob made out like a bandit, 254%. That's fantastic, Bob. But it gets even better. Intraday relative strength analysis doesn't just work to the upside. It also works to the downside. For example, let's say you're smart money and you want to sell 5 million shares of Uber. Can you imagine, excuse me, Thinkorswim, excuse me, Interactive Broker, I want to sell Uber. How many shares? Oh, only 5 million shares. I mean, they're going to hang up on you. And then you're going to get a call from the SEC 5 seconds later. They're going to take your trading license away from you. You know how they say we're going to take your driver's license away from you? I say that they should take trading licenses away from some folks. People should first get approved for trading license. You program your algo. They should take it away from Kathy Woods for sure. You program your algos to liquidate 5 million shares throughout the day in small chunks. This creates a methodical grind. You see that intraday pattern? That's beautiful right there. They're just selling it all day long. When a stock is under heavy institutional selling pressure like this, it has weak intraday relative strength compared to the rest of the market. You just need a way to spot it 1 hour after the market opens. That way you could ride the trend down throughout the day. Just like on November 1st with ticker VFC. If you would have known that VFC had weak intraday relative strength compared to the spider, right? Let's see here. There we go. You could have, in fact, it was the weakest one. You could have placed one quick trade during the first hour of the day and then bagged the huge payday before the closing bell.
Just by buying a put, right?
Exactly. Michael, just all you do is buy. Yeah, all we do here is buy calls and puts. There's no, unless we're doing bonus trades, and I spell out the bonus trades in great detail for you.
That's what's great about this, Roger.
Yeah. It's just buying a call, buying a put. That's all you're doing. And I tell you which ones. There's only 2 rules. 2 rules you have to remember. 2 rules. And they never deviate. VFC crushed it 114%. Look at that. He did well. Think about it for a minute. Extra $3,000 from a day trade could have done a lot of good for a lot of people right now. Maybe cover a car payment or 2, right? Wouldn't that be great? Cover a car payment or 2? Maybe pay down some credit card debt. Wouldn't that be great too? Love to see that. Or even pay for a relaxing weekend getaway. All from one trade that only took a few hours. Now, we all know there's no guarantees when it comes to trading. There will be smaller wins, losers along the way. And that's why I always say to never invest more than you're willing to risk. But in all of my years as a professional doing this, I found that measuring a stock's intraday relative strength during the initial hour of trading is the best indicator of its future direction. And that's exactly why I built a state-of-the-art trading platform to track it. No, Patel, no, I didn't say that. You're confusing what I just said. And that's exactly why I built a state-of-the-art trading platform to track it. Here's how I use it to find stocks institutions are buying or selling within the first hour of the day. Let's say you want to find stock that has strong intraday relative strength. Pull up the relative strength scanner, run a relative strength scan, look for stocks that have the strongest time frame. Buy in, because the stock with the strongest relative strength within the first hour is stocks that institutional algos are likely buying or selling. Very simple. For example, November 6th, 1 hour after the market opened, Microsoft had strong intraday relative strength compared to the SPY. In fact, the hourly relative strength scan showed that it was the strongest stock in the S&P 500. Really simple. So I sent out an alert to buy Microsoft at 10:08 a.m., knowing algos were likely going to accumulate the stock all day long. Sure enough, Microsoft versus the SPY. SPY outperformed by a factor of 6. And Bob and Dennis and Howard and Barbara and Doug and Q and Vivek and probably another 300 made out like a bandit. Watch it happen on Intel. Another trade we nailed just a few days later. November 16th, Intel had strong intraday relative strength compared to the SPY. It was the second strongest stock on the hourly relative strength scan for the day. So I sent out an alert letting folks know Intel would likely be under accumulation. And just like that, what did Intel do? It went on a baboom spree while the SPY went nowhere. Closed Intel, 50% profit, Jeff, Kathy, BB. Now, of course, it works the exact same way to the downside. On November 16th, Tesla had weak intraday relative strength compared to the SPY. In fact, it was the weakest stock in the market 1 hour after the opening bell. I sent out an alert. And like clockwork, ooh, by the way, Tesla was looking kind of bearish a few hours ago. I don't know about now. I haven't looked at it in a few hours, but it wasn't looking very pretty. Boatload of you guys made money. Michael, Bruno, Adam, Arthur, Art, and others. Now, it's important to remember that no system is perfect. We've had some losers too. But by riding the coattails of institutional traders over the last 2 years, we've made out like bandits with a 94.2% win rate. And I think it's safe to say that after 363 winning trades and 22 losing trades since inception, I can't even believe I'm reading it, but it's true. 2025 is a good year. So listen, you can keep playing around. You can keep playing around and thinking that you know. Remember, the biggest danger that investors face is not knowing. It's thinking that they know when they have no clue. Keep worrying if a recession will hit. Keep hoping that we go back to all-time highs. Or you can cut out the guesswork and take charge of your financial future. All by tapping into the most powerful market force that exists. Real-time, institutional order flow. I'm inviting you and 1,628 other traders to join me in a very, very, very good group called Trading Pit. I told you, this is my pride and joy. The Pit is the only place where I do 1 to 2 active alerts per day, assuming the markets are, reasonable. NVIDIA earnings are not coming up. The Fed's not speaking in an hour, that kind of stuff. And you could take your very first trade today. Now, before I reveal my year-end forecast and give you my top stock picks for 2025, completely free, yes, free, what do people say about the Pit? And folks, what do you say about the Pit? What do you think about the Pit? One of the best programs out there, Stu says. I've never been winning this much consistently. By the way, he writes a book. He's an MIT guy, and he writes books, and he just put me in one of his books. I got to read it. Wes says, well worth the money. Wes, what did Wes say? He says, Get on board. He waited too long and missed the first 100 trades. Well, at least you got the other 260 something winners, less. Frosty, I've made Val. I've made money every day. Just bought a house in December. Turned up my small account with the pit up 50% in the first 10 days. Carlos, my retirement is now set. Michael made money on almost every trade. Deb, every winner's up over 35%. Brett, I get depressed on weekends when the pit is closed. Don't tell my wife you said that. Joanne is up 226,000. She's having a crazy summer vacation. Trips with 3 grandkids, but she's still able to place trades. Richard, remember Richard when he was up 50,000? Well, guess what? He's up now 315,000. The pit make things like this happen. Richard bought his daughter a car, and then John bought his daughter a car. Now, those are some of the best stories. Now, before we get into the 367th winner, which we actually already took today with Google and with VSAT, let me walk you through what you can expect in the pit. The moment my system spots institutional buying or selling pressure, we'll verify the data and we'll send you a Telegram alert. Not $100, $200, not a lot. You could do debit spreads. I'd show you how you could do debit spreads for $120, Jim. That's right. Moment my system spots something, I'll verify the data and I'll give it to you. Once you get alert, you can take the trade straight from your cell phone. Telegram is free and alerts are fast. And every day, yesterday, for example, I showed you exactly how you could take any of my pit trades for anywhere from $125 to $250. I spent about 40 minutes on it yesterday. Okay, about 40 minutes. Yeah, that's what you missed, Raleigh. I was showing everybody exactly how I do it. You can expect 1 to 2 action-packed alerts per day on average. Recently, we sent out an NVIDIA alert, 44% in an hour, and 2 more that same day, Meta and STX. And if you had 5,000 to each of those with the selected options, you could have walked away with $12,878 or $72. And your money would be tied up for less than 4 hours. Everything you need to get started today can be found in your Trading Pit Getting Started guide. You'll find bonus trading videos about how to balance your positions, bet sizing, and much, much more. And that is not all. You're also going to get my write-up, the Emotional Mind Traps write-up. This guide will help you master your emotions. Folks, I have now listen to me. I have people who read this every single day before they trade and after they trade. It's only 20, 30 pages. I made this because it takes into account all the crap that I went through mentally. If you have not read Emotional Mind Traps, get the pit and start reading it. Also, I give you updates throughout the day. Why I'm not taking a trade now, even though I love it. Why I'm staying in a trade, even though it's going against us. Why I'm fast to take profits. Why I'm slow to take profits. Why I think you should pyramid out of the trade. What is the market doing? What are internals doing? Are the markets helping us? Are they hurting us? Is volume good? All that stuff I talk about day in and day out. It's literally like sitting and looking over my shoulder. Real-time updates on important stuff. All right? Not testimonials, like important stuff. And you'll have VIP level assistance from my US-based customer care team to assist you with any questions you may have. Here's everything you'll get today. You'll get the Mind Traps, you'll get the Getting Started guide, you get the Trading Pit, and you get real-time updates. Somebody's asking how fast quickly do I need to place alerts? We'll talk about that after, but you got to be pretty quick to this. This is actionable. This is fast. This is not like one of those 7-day type of, it's not that. Although most people swing trade, but you got to, just depends on how fast it started moving after we missed it. All right. Now you're probably wondering, what is the membership going to cost you? Okay. With extreme proud of our, because we don't hold trades for 10 days.
Yeah,
Steve is
Roger,
asking. We'll get into that later. We'll get into all of that later.
Let me pause for a minute here, folks. Let's let Roger complete his presentation here. Trust me, I'm seeing all your questions, and we'll come back and address those.
Sounds good. Sounds good. While I'm very, very proud of my track records and my other services, nothing I've ever built comes close to the pit. This is where I put all of my energy in. Not all of my energy, but the majority of my energy. The swing trades don't. The other programs are like slow motion. They're very slow. Not Trading Zone Live. That's where Matt spends all his time. And I'm not just saying that. Earlier, if you take a look, you will see that we've had 23 losers, and our average return is 11.31%, and we've already had in the last 2 years 390. Well, today we just closed two, so that's 391 as of today, with a 94.1% win rate. And with the 367th win coming up, I want you in on the action, because just wait until you see this. If you started with $5,000 and invested 10% of the account into each trade with the selected option, you would have not only seen a great returns, but in less than 2 years, you would have seen your account grow not to 40,000, not to 80, not to 100, but life-changing 260,000. 260,000. That does not take into account any of the last trades we've done in the last few days. Okay? That's up to last week. That doesn't take into account the last 8 days. Okay? Which is more than the quadruple the average American annual salary is. Shouldn't come as a surprise that the trading pit retail is $4,995, and I am going to be raising it before the end of this year. That is a guarantee. In fact, if you try to sign up through the main website, that's the price you will pay. $49.95 for 1 year of access, which I think is more than fair, considering the six-figure profit potential that I've showed you. Plus, I'm scanning the market for you all day long, sending you 1 to 2 active alerts per day. Now, here's the deal. Because you're here right now, instead of paying $49.95, I'm going to slash the retail price down. It's pretty good. Then I'm going to do it again. All right? Do something nice for you guys. Summer's almost at the end. But I got to warn you, this is shutting down tomorrow. Now, when I say it's shutting down tomorrow, I mean it's shutting down tomorrow. Okay? After that, it's going to go back to $49.95. So if you want to join the pit, this is the last summer special I'm going to have. If you want to join the pit at the last best price, you need to take action now. We've had the highest win rate you will ever see in your life, because I've never met anybody who's better than me. I can't wait to meet that person, but I haven't met them yet. My win rate is off the charts, and I'm pretty good at what I do. You just saw how a $5,000 account could have blossomed into $260,186 in under 2 years. And today you have a chance to save nearly $2,000, and that's nearly half off. So if you're really serious about making 2025 the best year ever, and get ready to click the link in the chat, because spots are limited and they will go fast. I think Michael says I made $1,400 this morning. That's very, very good.
$1,400 this morning, guys. I'm putting the link in the chat right now. There you go.
Yeah, and here I'll repost that right there. All these thing. There you go. There you go. All right. Thank you for that. Now, $29.95, fantastic deal. Price is going to go up tomorrow. Click the link in the chat or go to rogerscott.com/trading, or give us a call, 904-706. This is not lifetime access. You're not going to get lifetime access for $29.95. Are you kidding me? 904-706-3539. And if you guys are looking for like a Christmas deal or something like that, no, price will not go below this price. It doesn't work that way. And it's going to go up. And I'm planning on raising it, and maybe even starting to limit it starting next year. The special price expires tomorrow. You snooze, you lose. The flash sale, $29.95. Go to rogerscott.com/trading. And Michael's on a boat making this money while he's on a boat. 904-706-3539. My goal is for you to pay this off in no time at all, just like many of our traders did. The pit paid for itself first 2 days of trading. Lifetime member, there's Larry. It made 3 times the cost of the pit since I joined a month ago. Very, very, very nice. You at this point, there should be absolutely no hesitation. That's the best way I could put it. I wouldn't be walking, I'd be running and joining the pit. I made 3 times the cost of the trading pit since I joined a month ago. Wes, honestly paid for my membership and Pro Trader dashboard in 1 week. I love that. Love that. Trades have already been paid for. The pit, Rick. Alan, 30% gain on all the trades. Already paid for trading pit 4 times over. Love the pit. Just follow Roger and you're going to pay for it within a week, even with a small account. So far, Richard, I have repaid the pit. I invested 10 times. I think he's now at like 1,000 times reinvestment. DJ, trading pit today up $602. Very nice. Adrian says 2 weeks ago, won't look back. Carlos, you will pay for it in a month. Pay for it. I think you'll pay for it a little quicker, but that's just my opinion. Roger's not kidding. I've already 5 times my initial investment. Changing and helping my family's life and the future. Those are some of the top stories that I've heard. And my goal is for you guys to pay it off even faster than Alan, Rig, Deb, and many, many others did. So don't wait. Join the trading pit before the price goes up $500 tomorrow. Click the link in the chat or give us a call to secure your membership and instantly save $2,000. The 367th winning trade is coming up quick. $29.95. Price goes back up $500 tomorrow. Folks, you would be absolutely out of your mind to miss this. To my knowledge, the trading pit is the only place where you get 1 to 2 active alerts per day on stocks that institutions are buying or selling. And yes, I show you how to do the options. And yes, most people trade them as swing trades. Like recently, I send out an alert to buy coin, 11% in 34 minutes. Another one on WBA, 26% in 2 hours. It starts in the morning and it ends in the after at 4 o'clock. Market hours, 26% in two hours. We're not done yet. We had another one on AbbVie that day, 82% in 2 hours. Let's see here. Erase this. Thank you, Bugs. I appreciate it. That's very nice of you, Bugs. Very, very nice of you. See, look what Bugs wrote. Life changing. Bugs makes 50,000, 30,000, 40,000 a day. Life changing. What do you want me to tell you? Richard will tell you it's life changing. Omar will tell you. They're not going to tell you it works. They're going to tell you it's life changing. Big difference. If you would have put 5,000 into each of those trades, you would have made $11,900. If you guys want to see how a real professional trader trades, like real pro, I think this is a good opportunity for you. I think I've proven in the last 2 years that nobody can touch me. Not even this close. All right. 11,900. That would have been more than covered the cost of today's membership. That could have turned from 1 day of trading. The link, get the link, click the link, start today. The price is going to go up tomorrow. And when I say it's going to go up tomorrow, it's going to go up tomorrow. We're not playing around. It's going to go up tomorrow. $500 actually. Now, what do folks have to say? James, I started with $4,000, now have over 8,000 in just 15 days. David cleared 5,000 on CVS. Paul has 60 wins with 1 loss. Now think about that for a minute. Have you ever experienced 60 wins with 1 loss? Did you guys know that up to last week, we didn't have any, we had 44 out of 45. We went on a run where we had 44 out of 45 since I came back from Germany. Jason says, worth its weight in gold. Thank you, Jason. I appreciate that. I really do. I do appreciate it. Marshall only takes Pitts trades now. Oh yeah, they're good. Lauren booked 2,200 on a single trade. BST was my first trade in the pit, cleared over $2,200. Carlos, the trading pit and Pro Trader dashboard are helping me gap my way into retirement. Dom said it, no losers over the last trades. I have no idea what losers are. Turned 1,000 into 4,000. I like that. I'm doing great in the pit, over 200% profit in 5 months. I like that. Very, very nice. I like that. In my last 3 years, I've spent over 15,000 on subscriptions to learn. Follow. Roger is by far the best. Thank you. If you're on the fence about buying it, just do it. Buck. Thank you, Buck. I've been trading for 25 years, and I've never experienced something like Roger. That's what my wife says every day. Just kidding with that. You're a wizard, Roger. Total for the day is $6,400. You get all the alerts through Telegram, and Telegram. Ben says $6,413 profit, my best day. Okay. Roddy, I had a phenomenal day exceeding my daily income goal by 400%. The trades are well over 90% successful. Very nice. I've doubled my account in a month. Angie, we just saw Angie here a little while ago. You could start with a small account. You don't need a big account for this. Some of my best, the majority of traders take them as swing trades. Some of my best, even safest trades this year have been day trades. Those are some of the best stories I've heard, and I cannot wait to hear from you. $29.95. Tomorrow it's going up. Important announcement after you complete your membership. You could use I'll get into what you could use, but you could use Thinkorswim, TradingView, and TradeStation. After you complete,
that's for the dashboard.
Oh, yes, of course. You could use any platform you want for this. I mean, you could trade.
This is just to be clear here, guys.
Yes.
You know, the Trading Pit is an alert service, and these alerts and additional market information and commentary is going to come to you via Telegram, and you can get Telegram on anything that you can reach the internet with. Now, Roger's going to talk to you in a little bit, but if you would like to also have the Pro Trader dashboard, then it will work on Thinkorswim, TradingView, and TradeStation, but we'll come to that in a minute.
Exactly. All right. When you join today, you'll also get a chance to buy Pro Trader Dashboard, to buy it. It doesn't come with it, to buy it. It's very easy to install. It's literally a piece of cake. It literally takes less than 10 seconds. And once it's ready to go, once this baby is ready to go, it is ready to go. It'll find you the strongest stocks. It'll find you the weakest stocks. You wait for the down arrow for a breakdown. You wait for an up arrow for a breakout. It gives you your profit targets and your stop loss right here. Stop loss and profits. Very, very cool. If everything works out, look at that, 104%. This is your chance to secure access at a massive discount. Traders are in love with it. Roddy, I bought 5 stocks today with the Pro Trader Dashboard, 5 wins. Art made 2,000 this morning with Tesla. Gary, 18 wins, 1 loss. Ben closed 2 more winners during the webinar. Make sure to get Pro Trader Dashboard. That's what I always say. Pro Trader Dashboard, and the Pit is without a doubt another of those opportunities. Murmis, he's very happy. Thank you for making me a better trader. I love Pro Trader Dashboard. Have been making consistent money on it. Those are some of the best stories, and I cannot wait to hear from you. And if folks, I'll answer all your questions in just a few minutes, okay? Again, get it today before the price goes up tomorrow. You've got a couple of choices. You can leave now, continue looking for the next hottest trading strategy. Good luck with that. Keep chasing trades you shouldn't have. Keep panic selling. Keep losing repeatedly. Just keep doing what you've been doing. I mean, if it's working, it's working. What do you want from me? But then I think there's a better choice. Follow somebody who's actually been doing this professionally for many, many years. Follow somebody who was good enough to trade for one of the richest families in the world. Trade with somebody who was good enough to partner with the guy who's potentially going to take over Powell's job. There was a reason for all of these things. They didn't happen by coincidence. They didn't happen because of my face. You know what I'm saying? They happened because of this, because of something between my ears. Let me help you get on the other side of this fence, okay? Join me and 1,628 others, and I'll talk about all your, Ruth, I'll answer all your questions in a minute. It's the only place in the world where you can piggyback off of hedge funds and institutional traders in real time. Secure your spot at nearly half off. Save $2,000 today before the price goes up. $29.95. Take advantage of this now. How many alerts? Just depend, but usually 1 to 2 per day. Sometimes I'm on a roll, but usually 1 to 2 per day. Thank you, Ken. Ken is a post-PhD from MIT. Very, very smart man. Can you do this with a small account? Somebody was asking me how big the average trade is. The average trade is $174. So that's the average trade. Not
small
that,
account friendly. Yep.
Yeah, it's not that bad. And most people do it as swing trades. Is there any guarantee? Yes, 14-day money back guarantee. Is it only for day trades? No. The majority of folks swing my trades. Why? Because every stock starts out as a swing trade. Okay. All right. In fact, what does Chess say about Pitt? I've noticed you saying that every Pitt trade can be a swing trade. Wanting to make things slowly, profit of 3,193 already paid for my subscription. We also do bonus spread trades like on Apple recently. This is the ones where I give you the bonus and I give you everything. Look at the feedback on this. 3,000, 370%, 390, 1,500. People were pretty happy about this trade. And this guy, Michael, he didn't even know what he was doing. He just followed instructions and he made 410%. That's pretty good. I like that. That's really, really, that's very good to see. In fact, we've recently been on a streak. So how we've been doing recently? Well, we talked about the bonus trades. Well, I've had 46 out of the last 47 trades. We've had 46 winners. So I would say that we've been doing really, really well, like really, really, really well. Have you guys had 46, 47 winners in this crappy market? In this crappy market, these are all winners right here. All of these, one loser, all of these. This is including bonus trades too. This is just to show you our win rate. How will I receive alerts? Telegram channel. Telegram. Just doing calls and puts. That's it. Is Trading Pit beginner friendly? Absolutely. Like, this will help you. This will give you, if anything, it'll teach you some patience. Because folks have no sense for patience. They need to have some patience in the market.
And the other thing I'd just like to kick in here, Roger, is that if you are in fact a beginner, what I really like about this program is if you combine it with the fact that you should actually start with a paper trading account, take the first month or so, get 40 trades under your belt. Roger is giving you the trades, the entries and the exits. Learn how to buy a call, buy a put, learn how to do these things, and then prove to yourself that you understand what's going on. And once you have your own stats, that's the time to go ahead and start thinking about investing real money. But Roger, I think that's a huge bonus for somebody who is a true beginner.
Yeah, and I'll tell you something else. We've had very difficult markets. So the fact that we've been doing this well in this market, I think says quite a bit. Marky Mark's asking a question. You can put anything you want. You don't have to put them on one screen, but you can just flip pages. Yeah, you could do that. It's a little too confusing to put them on one screen, I think. I think it's a little too confusing. So is it beginner friendly? Absolutely beginner friendly. It is absolutely 100%, 100% beginner friendly. As a matter of fact, this is a great place for folks to start. I think if there was a place to start, this is a really, really, really good place for folks to start. Okay. Let's continue. What trading platform? You can use TradingView, Thinkorswim. That's for the dashboard. And you can also use TradeStation. It's also compatible with TradeStation. Okay. Yes, Raleigh's brother, Cam, I can't believe I mix them up all the time, but I do. But from 10 to 1 p.m., they are available to help you out. They're extremely knowledgeable. They're extremely helpful. And they will help you every step of the way. Every step of the way. You definitely want them on your side. And remember, they get the same questions all the time. If you have a question, somebody else has a question, they will answer it. So again, take advantage, folks, of this opportunity. Don't let a good opportunity pass you by. Prices are going to go up $500 tomorrow. Now, let me give you my year-end forecast, okay? Let me give you my forecast.
I can't believe you're doing that. This is great, Roger.
I think so too. I want people to have a good year event forecast. I want them to have this, and I think this is going to really help them out. So let me just take a look at something here. Okay. So interest rates. I think that Fed is posturing and Trump is posturing. I think they're going to start lowering. I think they're going to start lowering. Let me tell you truthfully, I thought they were ready to lower, and then I changed my mind because we started seeing negative data come out, and I really did not like it. So I'm kind of how can I put this? I I don't think it would be bad for them to lower it right now. It wouldn't be the worst thing, but I also think that they could literally have egg all over their face because I don't really see the need for it right now. And between you and I know a lot of people are going to say that Roger, this is political. Well, you know, this is political, and I think they're feeling the pressure. I think they're feeling the pressure, and they don't want the tariffs to really tank the economy. So I think they're going to preemptively do just a little bit, and that way it'll kind of get everybody off their back a little bit. But honestly, if I was a betting man, not a betting man, I would say I'm leaning 60% not to do anything and 40% to do anything. If the job data and if the Fed data wasn't so hot and the job data wasn't started coming out a little bit nasty, then I would say let's do it. But I'm kind of I'm torn. I'm torn.
I know,
but I think
the preliminary GDP numbers came out this morning, Roger, and in your morning session, you were like, "Whoa, folks, this is a pretty hot number."
Yeah,
At 3.1%, and you're going like,
what do we need?
Fed may hold. Yeah, what do we need to lower interest rates for?
Why?
The economy's,
Explain to me why we need to lower rates if GDP is so hot. Like why? Like why? I don't understand. I don't know. Remember, lowering rates is a crutch. It's like crutches, right? And we just don't need it right now. We just don't need it. And by the way, I just want you guys to know this. I mean, I'm assuming we have people here who are not 20 years old, but interest rates right now are not really all that high. I mean, do you guys remember when interest rates were 10, 12%? They're not that high right now. They're just not that high. So I'm not, again, I don't want to get too deep into this, but I think they're going to do it. Whether I like it or not, whether I think they're ready means absolutely nothing. So I think they're going to do it, and they may want to wait.
Of a point or something.
Yeah. Just to show good faith, to show good faith, just to show that they're playing game. Exactly what Raleigh just said. Next, volatility. Now here's where I think, and I was telling folks yesterday, volatility I think is due again to spike up to 20. I think we're getting up there again. Remember, volatility is mean reverting. And I was actually just telling folks the other day that I think next week with the employment report we have, we may have to take a look at VIX options or buy some VXX. Okay, just heads up. I'm telling you right now. I don't be surprised. Okay, oil. I don't think anything is going to happen with oil. And I've been saying that now for some time, and nothing has been going on with oil. I mean, it's been just like, to say it's been asleep at the wheel would be like an understatement, okay? By the way, I just want to show you guys, MP has 4 times hit this level already. 4 times it's been breaking this level, and it has not traded below the VWAP. And eventually it busts through. If you hit the door, if you knock on the door, eventually it'll open. So I think energy is going to stay between 60 and 70. I think another reason why energy is going to stay stable is because nothing's going to happen with Ukraine and Russia. And I think that if it was going higher, if it was to go higher, it would actually help Putin. If it goes lower, it's going to hurt Putin. If oil gets below 65, Russian oil market is dead. So I think there's a concentration right now, and I've seen deltas.
Roger, it always reminds me it's kind of a happy place because the oil producers are making money at this level, and we as consumers, anybody consuming energy, finds the cost reasonable. It's a happy place.
We're in a sweet spot.
Yeah.
I don't see a major. I agree with you. I don't see any major issues here at all with oil. I'm okay with the prices right now. Okay. Gold. Now, I've been saying this for quite some time, and I'm still saying it now. I think gold is just going to chop around these levels, and we just need to buy around here, sell around here. The longer we stay here, the higher the odds are that we're going to break out, and the better we're going to break out. But I think they're waiting for the tariffs to hit, and also we need to re-examine how much gold China's currently holding. Okay, because I don't know if they're increasing their holdings or if they're decreasing their holdings. Mm-hmm. Kind of want to know where Chinese have been putting their money in the last quarter. I'm really curious about that. And I'm not trying to be funny or anything. I'm really serious about that. Bitcoin. Now, this is an interesting one. Bitcoin started breaking down a little bit. Mike, here's what I would tell you guys. Keep an eye on these levels right here, this level right here. See how there's some support right here around maybe 112? And there's another support right here at about 103. But I think we're going to stay in this area. I think while energy prices are consolidating, we're going to be consolidating with Bitcoin as well.
Mhm.
You know, a lot of folks don't realize how much Bitcoin moves off of energy prices. Okay, I don't think a lot of people realize, but they do quite a lot.
Just the
Quite
cost
a
of
lot.
producing electricity. Yep.
Yes, exactly. Direct correlation. Sectors. I haven't changed this. It's XLC communication and SMH. I think chip stocks. I don't think so. Here's my view. A lot of people are now talking about AI being overvalued. First of all, let's stop the AI. It's just chips. Okay, AI. It's like calling utility company nuclear companies. It's the funniest thing I've ever heard. Internet company, just tech companies or chip companies. I don't think we're in any kind of a bubble. I think that we're primed to grow. I think what's happening is this. I think that what people believe is going to happen with AI in the next year, in the next 10 years, I think they think it's going to happen like in the next 6 months. It's just going to take a long time, but the demand is there. The demand is there. I just don't think we're going to have talking robots and dogs that follow us to school. Basically, you know, Obi-Wan Kenobi and all that stuff. I think that's like a good 10 years away. That's my point. I don't think I think robotics is the biggest thing that's going to happen to us in our lifetime. And I've been saying that for the last 20 years. I just don't think it's going to happen as fast as people think it is. I think technology is just not here yet for all those cool things that we want to see. And I think most people would agree with me on that. Okay. I think that we have dumb AI, not smart AI. It's going to take a little time to shift. It's going to take a little time before it gets smart. Okay. No, I didn't say it was far away. I just don't think it's here. I think everybody's like expecting, like a year ago, people were talking about like talking robots, and I'm like, it's going to take a couple of years. It's going to take a couple of years. We're getting there, but it's going to take a couple of years. You're welcome, Peanut. You're welcome. Good. I'm glad you made money on those. So weakest sector, small caps. Why? Because you know how everybody is rushing into small caps right now, and they're thinking small caps are going to go up because the Fed is going to start lowering rates. Well, remember what Raleigh and I just said a few minutes ago? They're not, just because they start lowering rates doesn't mean that the pace is gonna increase. They could be lowering rates for the next 5 years, you know. And remember something else. Our president has a very limited shelf life, and our president is only going to push them so long. So remember, midterms, this, that. So again, and yes, I guess I'm being a little political because obviously there's pressure from there, but that pressure is not indefinite. So I don't think small caps are ready yet. I think if they were ready, they would already be outperforming. Well said, Ken. I think they would be outperforming the other sectors, and they're not. S&P, I'm very conservative, 6,200 to 6,500. Why? Because I'm not seeing any movement in commodities. Commodities and energies is what gives the markets their mojo, and we're not seeing any energy in the market. Just not seeing any of it. Now, let me give you my top stock picks. I like Google, I like AVGO, and I like COF. I like these. I like these stocks. I do. My weakest stocks, SFM, GIS, and I think this is going to be partly because of inflation, and RYAN. So SFM, RYAN, Ryan, the name Ryan, my son's middle name, and GIS. Okay, so again, Google, AVGO, COF, SFM, Ryan, GIS. Okay. Folks, price is going to go up $500 tomorrow. It's not a threat. It's a promise. Okay. Take advantage of it. Take advantage of it. Do yourself a favor. Get into, in my opinion, the best program for stock options on Wall Street. You still short, Matt? Stubborn beast, aren't you? Good for you. All right. Any questions? Do we have any questions? Questions?
Yeah, so Roger, once again, terrific presentation. There were several questions that came up during the presentation that were semi-answered, but I like this one. There were several people that were going, Roger, this looks great, quote unquote, but do I have to sit in front of my computer all day? And I
No,
think
no.
what people, yeah, why don't you explain that, how this is an alert service and how that works?
Yeah, no, no. What you need to do is you need to have access. You need to have access to your phone and to a trading platform like your phone. Let me give you an example. Let's say you have a let's say you have a let's say you have a gym and you have classes between 11 and noon where you can't check your phone. Well, this is not going to help you. You'd be better off in a swing trading program. But if you can check, let's say you're a truck driver and you're sitting there and you're driving your car all day and you get ding. Oh, okay. Oh, okay. Ding. Oh, okay. That, do you see the difference?
Mhm.
So there's two kinds of busy. There's busy with being able to check your computer, and there's busy with not being able to check your computer. If you can't check your computer throughout the day, then this is not going to help you. But if you have access to your phone, to your computer, you could check it. This is great.
And
Because
that's
it only
the whole
takes
point. Yeah,
yeah,
it's an alert service, guys.
yeah.
You do not have to be sitting, you don't have to even look at the charts. Roger sends you an alert, tells you when to get in, has a very straightforward formula for converting that into an option trade, and you do it all on your phone. I don't want to oversimplify it, but the key thing is this: you do not have to sit at your desk and stare at your computer all day waiting for an alert or waiting to exit a trade. And I think that's the beauty of an alert service. Some people are saying, here, Roger, can I do this with a small account? And I think you said the average trade is like $174. So that tells me that, with a $2,000, $3,000 account, you're not putting that much on the line on an individual trade.
No, 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 not at all. And I always tell people, like, if you're going to buy options, buy the same amount, dollar amount for each position you do, because you don't know which one is
Right.
going to make the money and which one is going to make the money. So,
And
something
interesting here, Roger, are you ever in more than one trade at a time when you're in the pit?
sometimes two. I
Okay.
think two has been the most we've been in, from what I remember. Alerts come out all day long, anywhere from 9:30, not 9:30, anywhere from 10. No alerts except liquidation. No initiation the first half hour, only liquidation. So from 9:30 to 4 o'clock, pretty much all the time,
Mhm.
all the time.
And not only alerts, you're going to get market commentary.
When I see something juicy, that's when I rock and roll. That's the key. That's the key. You need to find something that has high probability. If you can't have something that has high probability, then you don't want to do this. Very, very simple. Very,
And
very, very simple.
and guys, the alerts don't come out at a specific time. Once again, Roger is looking at the markets, and Roger, I experience. I'm in the pit, so I know what you do. Roger gives you plenty of heads up. He'll say, "Hey guys, I'm looking at the market internals, and at this point in time, if things hold, I'm adding this and this and this to my watch list, and I might take action to it." So you kind of get like a little bit of a warning as to what Roger is thinking. And then he'll come back there and say, "Hey, guys, I really like things or set up. Let's go long Microsoft." And at that point in time, there's a very simple formula that he uses depending on whether it's a day trade or whether it's a swing trade. And you go right to it's very easy to place. But there are no pop surprises. And Roger, that's what just really impresses me is you're letting us know what you're thinking. You're providing us a heads up. You're saying, here's a warning. You're saying, hey guys, I'm thinking about getting out now. Maybe I'll get out now and hold the position a little bit longer because I want to run her on. That's all the type of stuff that you're going to get, guys, on this Telegram service right to your phone. It's amazing.
That is correct. And the phone number is 904-706-3539. Okay.
Okay, some other questions that came up here. Yeah, so we're coming into a long weekend because it's Labor Day. So when you think about the market like tomorrow, which is Friday, I know generally speaking, you have feelings about Friday, especially in the afternoon, but prior to a holiday, do you stay away from those, or do you basically still saying, Raleigh, I look at the market internals, I look what I'm seeing, not what I think or what I hope, and if there's an opportunity there, I'm going to take it regardless if it's Friday before Labor Day.
It doesn't matter. It just depends on how good the opportunity is. It just depends. It just depends. If it's an A+ trade and I see it running up and it's not overextended and it's Friday and the sector's hot and volume is good, I'll take it. I mean, it's not something I do very often, but I don't care. Just depends on the whole enchilada.
Absolutely.
You know?
So one other question that came up from somebody, I think he's really excited about the program, but he's trying to square in his mind, Roger, the average win rate, versus the number of trades we take, and the fact that we showed some examples of some pretty nice wins.
Mm-hmm.
And he's just trying to square in his mind, okay, I see the average return is 11%, but you must take some pretty big losers compared to some of the winning trades that we saw. And I just wanted to just lay this out here. Once again, you can answer the question, Roger, but we're not holding these trades for an awfully long time, number one. Number two is I see it 1 to 2 trades a day where the net is 11%. That's not per week. That's not per month. That's per trade. And you're looking at 1 to 2 of those a day.
Yep.
And I want to try to understand where this gentleman's coming from, but I think he's just trying to square the fact that we saw some examples where there's some big percentage wins. But
sometimes I'll take 5%. Sometimes I'll take 12%. Sometimes I'll take 25%. Sometimes I'll take 50%. It just depends.
Mm-hmm.
It just depends. It just depends.
It all
But those
depends.
losers that we had, they'll hit you pretty hard. I don't think we've ever had a 0 on any of the options. I don't think we've ever held anything for 3 weeks. I think maybe 1.5 was max, as far as I can remember, except maybe rope. I'm not good with time, but I mean, you're going to have losers, but who really cares? Let me ask you this. If you have 306, if you had, let me give you an example. Let's just say you had 100% loser, right? And then you have 43 winning trades.
Yeah.
What do you care? What do you care? Who cares? Who cares?
Exactly. And
who cares?
Right. So I think from this perspective, once again, I know several people are very interested in the program. And Roger, we're in an industry where there's some questionable people out there. So
yes.
There's always a bit of skepticism around these things, which is why we really do appreciate, the comments that so many people have made here in the chat panel. Roger, like I said, I know you were focused on the presentation, but so many people shared their personal experiences in the trading pit. And they're all extremely supportive, and they should be, because once again, guys, we're not talking about, back-tested trades. These are actual live trade alerts that Roger has issued, almost 400 of them, with a 94% win rate and an average return of 11.5% on every given trade. And those are real.
Now, most folks, their average return is closer to double that, because most folks keep holding their trades overnight.
Yeah, and that was the other question, which was, Roger, I see a lot of very fast trades in here. Is this a day trading program? And I'm sorry, Roger, I'm answering my own questions.
That's
here,
okay.
But it just, please tell me if I get it wrong.
90% of the folks hold their trades overnight. Remember, Richard will tell you, Omar will tell you, the majority of folks hold their trades overnight. The majority, big. And Michael says my average return is closer to 35%.
And if you don't mind, Michael, I'm just going to repost that for people to see. And the other thing I wanted to point out, Roger, is during the VIP session going into this, you made a very strong point of saying that every trade begins as a high quality swing trade.
Everyone.
So you start from that point, and only then do you look at the 5-minute chart and see if there's, an opportunity you may want to take. And you're not a greedy pig. If you get into the market and 2.5 hours later, you're up 35-40%, well, why not take it?
Hey, Sam, did you hear me? Did you ever hear anybody here except for Sam hear me say that I don't give exit alerts? I don't understand how you could not give exit alerts. To me, that makes no sense. Then you're not in a program. You're just looking at stocks if you don't give exits. Of course I give exits. What kind of a trader doesn't give exits, Sam? What kind of a guy do you think I am? Oh, yeah.
But I guess it happens, Roger. And so once again, this is an alert service. You're going to get the alert to get into the trade, and you're going to get the alert to get out of the trade. And Roger, so many people want to know. So what's that formula for converting the options? You know, it's all covered in your education.
I do. I cover it, and I cover it almost every day. We literally have sessions on it by sessions. I cover it at least 20 minutes every day in the VIP room.
Mm-hmm.
So, you know.
And
yeah.
The absolute last question I had, and I thought this was a good one, once again, from somebody that's relatively new, I think, to the VIP room, Roger, their statement was like, I'm hearing a lot about these bonus trades. So what is a bonus trade?
Well, that's what I started talking about. Like, I'm probably going to give a time spread bonus trade when we get out of here today. I'm looking at something that may look a little interesting. But there are trades that I give you, and those I spell out. Like buy this option, this expiration date. So somebody asked me here. Mark asked. The example showed the advice: go long, go short. Mark, there's two. You know what? I'm just going to show you how easy they are. I'm going to do it for you right now. If you're day trading, you go out 4 to 8 days on the option. You buy a delta of 0.70. If you're swing trading, you go 3 to 4 weeks out on the option. You buy a delta of 70. If it's an expensive option, or if you're day trading and you want to do it on the down low cheap, you buy a 0.50 delta debit spread with a 50% risk to reward, expiring within 4 to 8 days, and then your cost is $125. If we did that on every trade, our return probably would be, on average, return probably would be 40%. I just don't bother. And what I just explained to you, you could learn within 3 minutes, or you could just follow my VIP room, because I teach what I just talked about every single day for 20 to 30 minutes. And I went on Monday, today's Thursday. On Tuesday or yesterday, I went a full hour with Kane, giving you one of those examples for every one of my stocks on my watch list. See how fast I set those rules? That's how. That's it for all of them. For the history of the program, that's it. Can you repeat what you?
Yeah.
Sorry, Michael. You just rewind the tape or watch it again. It's the same thing I say every day. That's the thing, Michael. The next time you hear me say it, it's going to be exactly the same thing. For me, 80% of the trades are day trades. For you guys, 80% of the trades are swing trades. And most of you, and what I do is this: I say, okay, I'm getting out right now, but I love this trade, and here's where I'm targeting the exit. And then when it gets there the next day, I'm usually like, hey guys, by the way, if you held this trade for a swing trade, it's a good time to get out now. Even though I threaten to never do that, I do it every time, because I'm a sucker and I like you guys, and I do it every time. So I'm always giving you my trades, even though when they're swings, when they're this, when they're that, I'm always giving you my goodies, even when I threaten not to. Even when I tell you it's a bonus trade and you're on your own, what do I end up doing? I end up doing exactly the same thing. I give them the exits too, even though I said I'm not going to. So let's just say that I've been being very, very nice to everybody and giving them just about everything they need to place the trades. All right. Any other questions? I just reposted Bug's testimonial in the Telegram channel.
I know, isn't that amazing? Isn't that amazing? No, Roger, I think that really basically clears out the slate of things that I had identified. And once again, I also want to thank everybody in the room here. This is an open chat. And Roger, what's really great for me to see is that many people will post a question to everyone, and you have people in the room that are answering those questions, and they're spot on. They're spot on. So an awful lot of that, and we do appreciate that, folks, for everybody that's here. Too many to name the individuals. Okay, folks. Well, Raleigh back with you here live. I just wanted to go ahead and pause the presentation because it was winding down, but I'm back with you live here. And just give me a moment. I want to share another screen here with you, but I want to thank you all for coming today and to being not only listening to us in the VIP session with Matt Horton and myself, where Matt spent an awful lot of time talking about trades that he sees in the markets and some quality time on how he uses seasonality. Just outstanding there. And once again, we just sat through a replay of yesterday's presentation on the trading pit. So once again, I'm here to answer any questions that you may have at this point in time. But as you can see, the special pricing that we have in place, the normal price is $49.95. for a year. We've knocked $2,000 off the price, and it's down to $29.95. And when you click on the link, this is what the landing page looks like. And you can see that there's, 1 year price for the trading pit is $29.95. And when you sign up for the program, this is a screenshot of what the members area looks like in the one-click membership area. Now, this is a screenshot of the top part of the site. There's more information that's there, but essentially a getting started guide. This is a wonderful place to start because it really grounds you on what the program's all about and also answers a number of your questions about, position sizing, what's the best way to trade options when I see an alert, things of that nature. Joining Roger's Telegram pit program, you do that here. And if you want to go ahead and attend a live mastermind event or look at what's recorded, you get those sessions here. If you need to get set up with Telegram, if it's the first time that you're doing that, you do that here. So a ton of information available to you, obviously 24 hours a day, 7 days a week. This is your membership area. Now, Roger did also make an important announcement here because what he's making available is his Pro Trader dashboard. And the best way I can put this, guys, is that the trading pit, to use the biblical analogy, is where Roger basically finds high quality trades, 1 to 2 every day, and then he feeds those trades to you. So he's giving you the fish, if you will. He's feeding you the fish. And there's a number of people that have said, well, Roger, that's great. I appreciate that, especially as I'm starting out. But what I'd also like to know is, can I get your fishing rod? Can I learn how to use it? Can I learn where you like to fish and what bait you use? And I could go on and on that analogy. But that's what the Pro Trader dashboard is. So for those of you that are interested in the Pro Trader dashboard, as he mentioned in the presentation, it includes part indicator and part scanner. And one of the first things that he does with this is he goes ahead and he scans the market to find the strongest stocks, or if he's looking for the weakest stocks, stocks that he would buy a put on, he scans for those opportunities and goes from there. And if he's looking at a short opportunity, for example, he's picked a weak stock off the scanner, he waits to see that the red arrow is pointing down because that's his entry point on that. And if he's looking at a strong stock, he waits for the green arrow to print. And at this point in time, if he enters the trade, you'll also note that it prints profit targets for him and stop losses. This is all part of the Pro Trader dashboard, which is part indicator and part scanner. And guys, for those of you that join the trading pit, okay, this is what the incremental price is. You can get the Pro Trader dashboard for 1 year for $19.95. Or if you would like to have it for lifetime, it's an additional $9.97 for $29.92. And what I am going to do here today, let me go ahead and put all this information in the chat panel so that you can see the complete, so that you can go ahead and can see the complete pricing menu associated with our services. The 1 year at $29.95, the upsell to $49.90, and then of course that's with the trading pit. And then if you want the optional Pro Trader dashboard, that's what it is. And folks, some people ask, do I have to have the dashboard to take advantage of the pit? No, you don't. These are standalone programs. And like I said, if you're in the pit and you just love the idea of getting alerts that Roger has personally curated for you, that's what the pit's all about. You do not have to be sitting there watching your charts. You just go about your business. Everything's going to come to you in a private Telegram channel, and you'll get an alert on your phone. So either a ringtone or a vibrate. If you have it on mute, you look at your phone, you can see Roger sees an alert here, go long Microsoft. You're going to be buying a call. Roger tells you exactly how to find the correct option for that, and away you go. No need to even look at a chart. So you've got that. But for those of you that really would like to learn, so what tool is Roger using to find these trades, and what are the selection criteria that he uses to find the best trades? Well, that's all included and wrapped up in the Pro Trader dashboard. So once again, it all begins with the trading pit for $29.95. If you want the optional pro trading dashboard, you can get that because another page will come up with that information. So, well, once again, folks, things are kind of quieting down here, and I want to thank you all for your time. Roger, who is traveling today to the West Coast, and Matt and myself, we all know that your time is valuable, and we certainly hope that you got benefit from this session. And if any of you would like to have a link to a copy of this presentation, once again, all you have to do is provide me with your, your name and your email address, and go ahead and put that in the chat panel, and we'll make sure that we send that link to you right away. Obviously, it's already been recorded, so there's no processing time, so we should be able to get it to you quickly if you would like to have a repeat or a replay of the presentation on the trading pit. And for those of you that are regularly with us in the VIP trade room or at the pre-market room in the morning, I just want to let you know that all of those events are recorded and they're available to you on Roger's YouTube channel. And you see it there, Roger's YouTube channel. Something else I'd like to share with you, if you've got any specific questions whatsoever about the program, and would like to address those questions to either Matt or Roger, I am posting for you Matt and Roger's email address. They look forward to your comments. Please don't ask them commercial questions like, hey, can I get a special price or that? Because that's all, they don't handle that. That's all handled by our customer care team at 904-706-3539. But if you have a specific question about the program or selecting a trade or about a particular trade that you took in the pit and you have some questions or whatnot, man, those are the kind of things that Roger loves to get. He and Matt both heavily monitor their email channels, and they usually get back to you certainly within 24 hours, if not sooner. So please feel free to contact them. And with that, folks, I see that it's 2:35 here. There's still a little bit more time in the market. So for those of you that are trading today, be careful, stick to your plan. I don't expect anything major to happen. We're going into a long 3-day weekend. The markets are closed on Monday, and we will be back to see you on Tuesday. And I look forward to seeing you at the VIP Trade Room Live on Tuesday afternoon. So with that, folks, enjoy the rest of your day, okay? And I hope that you're looking forward to or have made plans for some rest and relaxation with friends and family this long weekend. And once again, I look forward to seeing you on Tuesday. Take care, folks. Take care. And have a nice weekend. Bye-bye.